Over the past number of weeks, we have analysed Graphex Mining, an ASX listed company who is developing the Chilalo Expandable Graphite project in Tanzania. And after completing a detailed assessment on the company, we have valued Graphex at $1.16 per share. As part of this valuation, we also completed a range of scenarios to test both the robustness of the project, as well as highlight the significant upside potential in our valuation. Graphite has a number of unique properties that make it suitable for a diverse range of industrial applications, such as refractories and foundries, as well as new and innovative technologies, such as the lithium-ion battery. Another use for graphite, which has attracted less investor awareness to date, is its use in flame-retardant building materials. While spherical graphite has emerged as the dominant anode material in the lithium-ion battery, expandable graphite has emerged as the dominant material in the flame-retardant sector, with no competitor product in China, which is the largest market. To be classified as a high-quality expandable graphite project, in addition to grade and flake size, a high expansion ratio is also required. Graphex's Chilalo project, which is located in southern Tanzania and supported by good existing infrastructure, is one of the premier expandable graphite projects globally, as its expansion ratio is around 6 times the average rate of Chinese projects, who are both the largest producer and consumer of expandable graphite, as well as being around 3 times the average of other African development projects. Unfortunately, having a high-quality project alone in the graphite or other specialised commodity sectors does not necessarily guarantee the project will be brought into production, as offtake with a reputable partner is essential. Graphex's management team made this a priority for the company as they commenced negotiations more than 18 months ago with 2 state-owned Chinese enterprises. This includes China National Building Materials, who produces around 50% of all building material in China, and China Gold, the country's largest gold producer. And with an MOU agreed, binding offtake terms are expected to be completed in the coming months. The MOU also highlighted that the offtake partner will most likely become a joint venture partner in the project, with their interest being earned through an equity contribution towards the project's development cost, as well as arranging debt financing. This could essentially see Chilalo fully funded at the conclusion of offtake negotiations, with the likelihood of Graphex not requiring to make a significant contribution towards the project's construction cost, therefore reducing the likelihood of a significant capital raising or dilution event in the future. For full details on our report, which includes our valuation analysis, which reviews the key assumptions and sensitivities of the project, our investment and risk assessment, which highlights both upside and potential downside factors that investors should be aware of before making an investment decision, a site trip to the Chilalo project in Tanzania, where we take a closer look at the planned mining operation, processing route, and the existing infrastructure that will be utilised to export the concentrate, a range of management interviews, which includes discussions on the exploration strategy to grow the mine life further, as well as an update on the offtake negotiations and why this is so important for graphite projects. And finally, an in-depth review of the graphite and expandable graphite sectors. Please visit thesophisticatedinvestor.com.au. And if you have any questions about our report, please send an email to admin@tsicapital.com.au.